Let's take a look at some information and charts on AAVE for BraveNewCoin. So AAVE is a lending and borrowing protocol, one of the jewels of the DeFi crown, along with Maker, Comp, SNX loosely as well. They quote themselves at 24.5 billion in TVL. DeFi Llama has them at 14 billion in TVL. At least I think this is their calc for TVL here. They have several different versions. They have multi-chain stuff now on Polygon as well. And essentially how this works is you just plug in your MetaMask and you can lend a select group of assets, a growing list as you can see here, as well as borrow from the select group of assets with a certain level of collateralization. These lending and borrowing rates are variable based on supply and demand. So for instance, 12% for USDT as it pulls up my MetaMask. 12% for USDT is based on total borrowed versus size. So this will fluctuate over time. In general, these are typically refilled as rates go higher. You know, it's just a give and take. It's another type of market that you can watch and participate in. But this is a great example of something that most people would rather participate in over proof of stake, where you're exposed to volatility. For Dash, let's say. You know, Dash proof of stake is probably less than 2% currently, whereas the APYs here are much more variable, but the underlying is a stable coin. And you can say there's DeFi risk, regulatory risk, platform risk, smart contract risk. There's different types of risk, but in my mind, it definitely competes with a lot of these proof of stake protocols that exist. There's obviously ETH fees that play a big role here, because if ETH fees are what they have been, then people such as myself are not going to participate in markets like this for lending and borrowing, or they're just going to let it sit there and do its thing because it's too expensive to take in and out of the contract. Unless you have, I don't know, 6 figures plus, where you're getting that rate of return over the cost of the transaction fairly quickly. So the quicker this stuff goes to layer 2, the better. But it's all here to watch and look at. Sometimes you'll see certain things pop up on certain platforms as far as the APYs based on, again, lending and borrowing or supply and demand. So sometimes you'll see SNX at like 32% on Yearn or something, and it's like, what? And the reason usually is supply demand. You can see most of this high market size stuff is the typical stablecoins plus ETH, BTC, and AAVE. And they also have an AMM market. They have stuff on Polygon, like I already said, smaller market, but it's still there, right? Like 4% on Tether, that's pretty good. You know, again, you have to trust Polygon, but Polygon isn't going to explode on you. But there's increasing ways to borrow more and more stuff through DeFi. And AAVE is currently number 1 in TVL according to DeFi Llama. And if we look at AAVE over time, TVL is close to all-time highs. It looks like according to DeFi Llama, all-time highs we're at 16 billion, and we're at 14 billion according to them currently. And I'm sure AAVE is going to go increasingly multi-chain. Why not? Something else to worry about is Oracle exploits on different chains or layer 1, layer 2. I mean, the more we complicate things, in my mind, the more possibilities of throwing a monkey wrench in everything just at a random point, right? There's just increasing failure points potentially the more we complicate this stuff. I'm not saying it won't work. It's just, you know, as long as people are aware, right? Like, what does it matter, right? It's a risk. There's tons of risks. There's tons of different types of risks. The more we go multi-chain with this stuff, hopefully mistakes will happen and get fixed quickly, or get seen ahead of time and fixed appropriately, mitigated against. TVL, again, according to DeBank, basically, you know, sitting near all-time highs. Borrow volume definitely at all-time highs. Liquidation volumes had a mini peak earlier this month, but it was nothing compared to May this year, with 157 million liquidated in one day, which maybe in the grand scheme of things doesn't sound like a lot, but when you are market selling or liquidating stuff all at once, it causes a waterfall cascade where the underlying just continues to decline, and unless you put in more collateral, you get margin called, basically, right? And that's sort of what we saw in May. Saw a mini version of that few weeks ago, and for whatever reason, AAVE usually has the highest liquidations amongst Maker, Comp, and AAVE. TVL on Polygon is just kind of flat, slightly declining here. Borrow volumes flat, liquidations peaked a few days ago as well. Another thing to pay attention to is if there's problems liquidating something because something goes down, how does that affect all this? Again, this is just like more and more complex stuff that you have to hope works correctly, which again, not saying it won't, but it's something to pay attention to when it doesn't. Borrowing volumes across everything is at an all-time high. Amongst the lending and borrowing group, AAVE is definitely the leader as a percentage of borrow volume at 35% there. And it's good to see this increasing. Obviously, regulatory stuff, regulatory, with Gary Gensler of the SEC saying a lot of this stuff is a security. I don't know when. It's like, aliens, I guess. I don't know when they're coming. I don't know what they're going to do, but they're probably coming soon. I don't know what metaphor to use for that, but it's not even Black Swan because we know something is probably coming soonish. Certainly by next year, I'm sure there's going to be KYC, AML on everything. That's going to affect the numbers most definitely. Liquidation volumes across the board. Again, if we look at like the top liquidators, it's almost always usually AAVE, Compound second, but AAVE is definitely up there. And is it because of the way the collateral is handled, collateralization? I don't know, right? You'd have to dig deeper into that. But whenever there's margin cascade on chain, it's probably AAVE's fault because, or the people lending and borrowing on AAVE, because based on percentages, it's usually higher on AAVE. Transaction counts for the token. So I've talked a lot about the platform and the protocol, but as far as the token, again, I don't know exactly what it does. The other's governance, everything's got governance, cool, but does it have a use case long term? Transaction counts are falling, rising, I guess, over the past couple days, but generally falling from highs. Transaction values are rising, probably because ETH fees are rising. So nothing looks particularly bullish on that front. NVT is at an all-time high in the line here. Addresses, active addresses at multi-month lows. So if you were just an on-chain analyst looking at this, you'd say, this is bearish, right? I don't want to touch this. This doesn't make any sense. Why is it up 25% today or whatever it's up? And I would nod my head and agree with you, but technicals and other factors play a bigger role in my mind than on-chain analytics do. It's important to look at this stuff, but it's not always going to move the market. MVRV versus price. MVRV is a measure of market cap over on-chain activity. Again, realized market cap is basically on-chain activity. For most coins, a 2x multiple has been the top. Now, the DeFi stuff is kind of too young to know what really matters here. Like MVRV might not matter, NVT might not matter. Currently, MVRV is at 1.2. So in my mind, for all this DeFi stuff, if MVRV gets above 2, approaches 2 in the next couple months, then for me, that's justification to pump the brakes on further bullish continuation. I think everything's going to have a nice trend into January, into the end of the year. But I think there's definitely going to be obvious signs on stuff like this, which tells you, yeah, this is pretty overbought here. It's 2 times, the market cap is 2 times the actual on-chain activity. It's probably a bit overheated, right? That's what it's going to tell you. But right now it looks fine. Another market cap analytic to look at would be the PE ratio equivalent or market cap over annualized revenue. And this tells you how much of a multiple is the market cap above what the protocol is actually bringing in revenue. So SNX is kind of the opposite end of the spectrum at 102x market cap versus revenue, whereas AAVE is at the bottom, where market cap is only 5x annualized revenue. And in general, you want to be buying stuff that's on the left side of this graph rather than the right side. And you can separate this even further and say, what is protocol revenue versus supply side revenue? And most of AAVE's revenue is based on volume. They do have protocol revenues, which are comparable to Maker and Sushi, and Maker Sushi comp. So this is on the protocol level, whereas this is based on volumes. Uni has no protocol revenue yet, bit of a different animal than AAVE. But something else to watch for is, when does Uni start to absorb lending and borrowing? When does AAVE start to absorb stablecoins? Why doesn't AAVE have like a DAI equivalent like Maker does, right? I could see that coming eventually if the lawyers bless it to be, but Maker's kind of unique in that regard because it has its own stablecoin. 50% of the stablecoin is USDC, but I could see a world where AAVE and Compound eventually create their own stablecoin, because why not, right? In any case, these revenues are good to watch. Again, this stuff isn't going to move the needle to me most of the time, but it's going to influence trading decisions if I'm on the fence about buying or selling in certain areas. They're also increasing funds and indices around DeFi related stuff. This is one from Bitwise. They just announced this a few weeks ago, I believe, but it's got 20% AAVE, also has Maker Comp. I think you're going to see more of this popping up, and it may allow for just a constant, steady TWAPing bid situation into DeFi as more traditional investment vehicles get into this stuff. Grayscale also has a DeFi fund with 9.8% AAVE, mostly Uni. And also we have a fund at Tech Capital, obviously Enzyme. I'll get to that at the end, but a lot of investment professionals, let's say, are getting into DeFi indices outside of crypto. So non-crypto people, I think, are starting to look at this stuff more seriously and say, yeah, it's probably not going anywhere. AAVE Google Trends, it's a word in Finnish. It's a word in other languages, I think, too, because when you look at the worldwide numbers, it looks kind of wonky. But if we just limit this to the United States, where AAVE is not really a word in the English language that I'm aware of anyway, this is probably AAVE the coin. And Google Trends peaked in May and have been slightly declining ever since. But if price starts to perk up again, I expect this thing to easily push new all-time highs along with price. Flipping to technicals, I don't talk about low time frames too much on these videos because by the time most people see the video, it's already over, right? The analysis is like, who cares? But all the analysis I put forth into the content deluge is certainly applicable to lower time frames, right? You just have to be responsible with yourself and say, it's probably less likely to play out as expected. Things could get weird on low time frames. But when you see a multi-day bull div with what looked like an inverted head and shoulders, this is probably going to play out as you expect it to. I saw this on BTC as well, but it's unsurprising that AAVE is up a little bit today based on what the chart pattern looked like. Moving to high time frame technicals, if we zoom way out, put on the 1 year MA in the green here, and then 5 times that in the multiplier in the red. In general, it's been a pretty good gauge for buy zone, sell zone. Pre-2020, 2019 was kind of when AAVE wasn't AAVE yet. AAVE was Lend previously. 2020 is when this thing really took off, and you can see it cruising above the 5x multiple in the sell zone, cruising above again in January 2021, and then in the buy zone, May, June, July. Currently, it's above the buy zone, but it really looks fine to me. 1320 is kind of a crazy number for AAVE, because to me, fundamentally, I couldn't tell you what the token is even good for, right? But, I guess there's protocol revenue. There's revenue stuff there, right? Governance, obviously. But technicals say, okay, it likes 800, definitely 800 is the midline, and then 1320, this is going to keep moving up over time. But as we said today, 1320 plus is a sell zone, certainly, going into the end of the year. The pitchfork looks less of a fit than MA multiples do. This thing is way outside the pitchfork at this point. So I wouldn't really expect miracles here, but previously it looked great, right? It hit the top, hit the bottom, bounced around, and it's just outside. So let's say this thing does go bonkers bananas, 5K plus by the end of the year, right? It would have to return to the previous rate of change. So I think it's worth watching, but to expect this to happen, I think is definitely hopium. I wouldn't discount it, but it's definitely hopium. On 5200 EMAs, this looks fine. It had this long trend from 2019 to mid 2021. That is all reset, zeroed out. This thing has been ranging since January, really, on the daily. And the EMAs briefly went bearish and are bullish again. So from a trend perspective, this could easily have a run, right? Is it going to be a 10x, 2x, 10x, 5x, whatever? I don't know, but the trend looks fine for bullish continuation. And I don't talk about this a lot either, but if you combine let's combine this idea of 1320 with the trend metrics of the cloud, we can just put a line on our chart and say, yeah, this is where we think this is going to go. If we approach those levels or start to approach those levels, then we can act accordingly. But right now, if this is about to flip bullish on the cloud, we'll know by November, definitely, how bullish this is. If this breaks above 425 and the cloud starts to flip bullish, then it's game on. Just like the EMAs are telling you right now, this looks pretty good for bullish continuation. AAVE BTC, very similar to AAVE USD. It needs to get above 0.1. It needs to hold this 200-day moving average in order to get out of this ugly looking range it's been in since January. And then the measure move from that is around 0.25. So if this, then that. Got to break 0.1. That's definitely level to watch. AAVE ETH looks bearish, continues to look bearish, even with this move up. It's still trend-wise just in a bear trend, right? That's undeniable. It's below the 200, below the cloud. 5,200 cross is bearish. So it would have to break all this stuff above to show bullish continuation vibes. So that would be above 0.15. Level to watch, sure. If you want to buy the bottom or be a hero, this was a place to do that. And again, on low time frames, you're getting a weird inverted head and shoulders situation with volume declining with a bull div. Unsurprisingly, this did something today. Hindsight, sure, fine, whatever. But it's important to establish a baseline in your head for what you trust on the chart and what you can deviate from specific chart pattern rules or trend rules or whatever and say, yeah, this had a bias based on X, Y, and Z, even on low time frames. Lastly, I'll just mention the EPTC fund and DeFi portfolio. I trade for Techme Capital and Enzyme.finance, a non-custodial portfolio management tool where you can send ETH or USDC or just watch what I'm doing. You can see everything, including AUM performance, allocation, all the yield plays I'm in on Yearn, AAVE, Comp, all the tokens I'm holding AAVE at 8% in the fund here, amongst a lot of other stuff. And at the bottom, you can also see all of the trades I make, when I make them, how much they're for. You can see I haven't done anything in 20 days, basically. Really not much to do at this point, other than the regulatory discussion, right? Like, if it's going to happen, what are we going to do? Because I can't really act super quickly, reactively, because by the time I saw this stuff off on news, it's too late. The move happened. You're getting wrecked, right? So you either have to proactively do it or just eat the risk in your head and think, yeah, there's a risk here. There's a risk for everything. And we're just going to hodl on. So that's all I have for this one. Like, dislike, comment, share, subscribe. Happy trading.